Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Sean McGee. He's a practice leader with the Public Investment Management Group at KPMG, as well as Brian Seidler, managing director of deal advisory, also at KPMG. And we're going to take a look at the next wave of M&A in asset management. It's great to have you both with me. Now, Sean, in the article that was recently released, redefining the industry landscape within M&A and asset management, you say there's going to be a tectonic shift in the next 1 to 2 years. Tell us more about that.
Sure, and we absolutely believe that. We think it's driven by a couple things. The first thing we think is that the investor demands have changed. And if you ask, well, why have investor demands changed? There's, baseline demands for investors, but the distributors were a large part of that investor and client care, and their demands have changed. A lot driven by regulatory change. Really, you think about the fiduciary standard or now the best interest standard. The reality is there's a need for greater investor care, and the regulators are stepping up to make that happen, and that's increasing the demands. And as those demands increase, what's becoming increasingly important and clear to people is that they're being more demanding about sustained performance. We want sustained performance over the long term, and that outperformance is versus the benchmark. It's nice if you beat your peers, but if your peers are underneath the benchmark, it doesn't much matter. So outperformance on a sustained basis. If you can't do that, why shouldn't we move into a lower cost passive strategy? So also the demands for lower expenses on that side. So you're seeing this barbelling happening where active managers who can sustain performance do well, and passive managers who are going against a benchmark can do well also.
All right, now Brian, in terms of the recent M&A activity we've seen, what are you discerning from in the asset management space?
Yeah, we're seeing a robust deal-making environment for asset managers. 2008 was a record year for M&A activity in our industry. Deal volume was up 20% over the prior year, driven by a surge in activity involving alternative asset managers, coupled with a healthy level of tactical deal-making involving smaller and mid-sized managers. However, what was noticeably absent from the M&A picture for much of the year was large-scale transformational deals. That started to change in Q4 with Invesco's $5.7 billion acquisition of Oppenheimer funds, and we've seen the momentum continue more recently with Brookfield's multi-billion-dollar tie-up with Oaktree Capital.
All right, now large-scale consolidation, why now? Why are asset managers finally coming to the table?
Yeah, we think the current environment is ripe for large-scale M&A. Many managers are facing increased financial pressures, which are only being exacerbated by the macro industry trends, some of which Sean alluded to earlier around fee compression, rising industry costs, regulatory. You also have, the product barbelling effect that Sean described. And lastly, the bigger managers are only getting larger. We now see the top 20 out of the largest 500 firms managing more than 43% of the total capital. So we think now is the time that executives should be looking at M&A as a strategic growth lever, one that can deliver greater scale in their core offerings, diversify product lines, expand the client base and distribution channels, as well as create operational efficiencies and cost takeout opportunities across the business.
What type of deals do you expect to see? Who's going to be the buyers and sellers?
We expect an uptick in various types of deals, one being scale mergers among independent pure play managers, increased cross-border deal activity, whether that's managers looking to link up with firms in Europe, Asia, Canada, and elsewhere, as well as renewed divestiture activity among banks and insurance companies as they reevaluate their portfolio of businesses and look for ways to unlock shareholder value.
All right, now what's going to be the key to success for these mergers? These are really large deals.
Yeah, the two main issues we often see in asset management deals are around fit and post-deal execution. First and foremost, asset management is a people business. Its greatest assets go up and down the elevators every day. Buyers need to assess the cultural compatibility of the two firms, the quality of the teams, and the incentives they use to attract and retain top talent. On the execution side, in today's hyper-competitive M&A environment, we're seeing more and more buyers willing to stretch when it comes to price. They'll need to have a disciplined process in place to deliver on their synergies and deliver them fast, whether that's consolidating sales and marketing teams and business support functions, capitalizing on cross-sell opportunities, leveraging their distribution networks and investments they've made in IT and operation across a broader asset base. Executing on these synergy initiatives is absolutely paramount and could ultimately make or break the transaction.
All right, Sean, let's wrap it up here with you. The million-dollar question, what does the industry look like in a couple of years?
Sure. Well, I think with retirement reform, with other things that are happening, I think the industry grows in terms of assets under management. But I think those assets under management are going to be more concentrated in fewer players. And those fewer players are going to be people who either are really good at passive and asset allocation and taking care of investors from an asset allocation standpoint, or people that can show sustained outperformance against benchmarks, and diversified managers that can do both really, really win at the end of the day. And that's kind of what we expect to see.
All right, Sean, Brian, thank you so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.